With Ethereum near all-time highs, is it a good time to buy now or should you wait? So to take a look at Ethereum, let's first identify the higher time frame. So we'll analyze the price chart for Ethereum on the higher time frame, and then we'll go down to the lower time frame. So for higher time frame in this video, I'll be talking mainly about the weekly time frame, and for the lower time frame, I'll be talking about the daily time frame. Of course, if you want to further fine tune your entries, you could go even lower on the time frame. So you could go either like on the hourly time frame, the 5 minutes, or maybe even 1 minute if that's the way you trade. But in this video, I'll just be taking a look at the weekly and then the daily. Right, so let's begin with the weekly time frame. So as you can see, the all-time highs for Ethereum is at this price level. So it's about the 4.8, 4.9k level. So the all-time highs was established back over here. So back in November of 2021. So that's about close to 4 years ago. And then right now, Ethereum has actually went slightly above the all-time high back last week, but it was in an intraday, so it did not manage to close above that high, right? So right now, as we can see, Ethereum is actually hovering just below the all-time highs. So is it a good time to buy now or should you wait? So if you take a look at the weekly time frame, we can identify that this was the cheat area. So the cheat area or the low cheat. So basically what a cheat or a low cheat is a term coined by Mark Minervini, right? So it's a area within the base that is lower than your typical handle. So if you do base analysis, right? So this is the previous all-time high, right? So if we are talking about the standard handle tends to form close to the all-time highs. But within the base, there are actually opportunities to enter, and one of these opportunities to enter is during the cheat or low cheat areas, which present a lower price entry, and also but in terms of risk and reward, it's still as good if not better than your risk to reward at the handle area, right? So over here we see that there's the low cheat or the cheat area forming back in about July of this year, right? So you can see that prices actually moved sideways for a number of weeks. So it started back in May and then it broke out in July. So if you're looking to enter for a good risk to reward on Ethereum, you could have entered on the breakout over here on this week, and then you would have ride the momentum up. So if you take a look at the weekly time frame, right now it looks a bit extended in the short term. So you can see that prices have been on a relentless march since the breakout over here. So we have like 1, 2, 3, 4, 5, 6, 7, 8, right? So 8 weeks prices are up 6 weeks not in a row, but 6 out of 8 weeks it has been up, right? So it's a bit short-term extended, but that is not to say that prices cannot continue to move further up. But then just in terms of probabilities, there's a higher probability that prices will trade sideways or pull back a bit from here. That's in my own personal opinion, right? So if you take a look, right, actually this past few weeks price movement is actually quite similar to back over here, right? So this was back in November 2020, where we had like the huge move in Ethereum from about the lows is around 100, then it went all the way up to the highs of 4,800. So that's like a multi-bagger move, right? So if you manage to hold along the way, you have made substantial amount of profits. So we take a look over here. So we had the previous high over here, and then again we had the low cheat or the cheat area here. So it forms below the handle. So your typical handle tends to form near the all-time highs, but then this presents another opportunity to enter, right? So over here we had that cheat, low cheat. So similarly to what we are seeing in prices like in July, right? So here we had that sideways movement. Over here we also had that sideways movement, right? Then price volatility actually died down, and then it managed to break out over here, and then it went on a very strong move up. So similar to what we are seeing right now. So the base actually formed quite a bit below the all-time highs, and then this was the in the style of trading that I do. This is a one of the better entries compared to if you enter around here on your standard breakouts, right? So this presented a better opportunity. And then at the all-time highs, right, you can see over here, it also was a bit short-term extended, right? So on the breakout, usually this is what we tend to see what we want to see in a strong breakout, right? So after prices breakout, we want to see multiple wicks of like up wicks, right? So over here we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, right? So 13 wicks from here to the previous all-time highs. Of that 13, we have 1, 2, 3, 4. So only 4 wicks were down wicks, right? So that makes it like 9 out of 13 wicks was up. So that is what we are also seeing currently, right? So there are like 6 out of 8 weeks prices have been up. So this is what we want to see in a strong breakout, right? So multiple up wicks and then like very few down wicks. And then over here, you can see that it tend to move sideways for a period of time. So short period of time, sideways just below the all-time high. So the reason being is because at the all-time highs over here, right, people tend there'll be traders that tend to want to take profit, right? So let's say if they enter at a lower position such as this area, they will tend to want to take some profits off the table to lock in their profits, right? So when they are looking at the chart, they tend to sell at previous all-time high. So that's also why there tends to be a bit of supply coming to the market at the previous all-time high, right? And then when the supply comes in, and then there'll be some selling. So that's why you see some sideways movement. So the reason why there's not a huge pullback, because if there's a lot of supply and then there's no demand coming in, there tends to be a huge pullback. The reason why there's no pullback is because there's some demand still buying up the supply, be it retail traders or institutions, they're still buying, right? So they're providing some of the demand to counteract the supply coming into the market. So there's not much of a huge decline over here. So similar, in my opinion right now, I believe that we could see maybe 1 to 2 weeks of sideways movement before we make all-time highs, right? So maybe like ideally it trades within this range, right? So we also don't want to see too much of a pullback, right? Unless it's a shakeout. So if it's a shakeout, then maybe we'll see a very long lower wick. That is also fine. But ideally, we want to see like volatility dying down over here and then the pullback being shallow. To take a closer look at the price action, let's go on to the daily time frame. Right, so you can see that right now prices are encountering a bit of supply at the previous all-time high. So how do we know that, right? We can see this. So we had like this doji candle. So a doji candle tends to be a candlestick that indicates like some indecision in the markets, right? So when prices broke above the previous all-time highs over here, then the sellers start to come in and start selling and taking their profits. So that's why we see prices moving back down below the all-time highs, and right now it's unable to break above that level currently. So for me, what I'm looking for is maybe if prices do decline, right? I want to see prices declining back to this 21-day moving average. So far in the past few weeks, this 21-day moving average has served as an important level of support for ETH, right? So you can see that this was one time that prices managed to find support at 21-day moving average, and then this was the second time, right? So if prices do decline from here, like in a shallow manner, then we ideally want to see it bounce on the 21-day moving average. But take note, prices might not exactly find support at the 21-day moving average. It might undercut a bit, but that's fine as long as it doesn't remain below the 21-day moving average for an extended period of time. So an example would be here, right? So you can see that prices did actually undercut below the 21-day moving average, but it immediately went and traded back above the 21-day moving average in just like 1-2 sessions. So that's something that we can look for, right? So hopefully you have enjoyed this video. I'll see you in the next one.